Good morning, it's today again. Welcome back to Joseph's Reserves. I'm Joseph and I store 20% of my income in the form of rare coins and precious metals. The gold to silver ratio has been a pretty strong topic lately. Some people wait for a high ratio and buy silver, others wait for a low ratio to trade silver for gold, but what if I told you we've been looking at the ratio all wrong? Because at the end of the day, we don't buy precious metals at spot price, and we don't sell them at spot price either. So today I want to take a look at 3 different gold to silver ratios that might change how you look at it. The spot ratio, the retail ratio, and what I believe is the most important of all, the liquidity ratio. Congratulations to South Haven Coins and Bullion for being the first to comment on my video yesterday. Y'all go down into the comments to find him and start a conversation. So the liquidity ratio is what I'm calling the ratio that exists when you're actually converting your stack into dollars. We're going to be comparing the liquidity of silver versus the liquidity of gold. Once we start looking at gold and silver through that lens, some very interesting thing begins to appear. When talking about the gold to silver ratio, most people start with the spot price. Currently, gold is $4,498 per ounce, and silver is $75.72 per ounce. At first glance, that gives us a gold to silver ratio of a little bit higher than 59 to 1. Let's just call it 60 to 1. So here I have 60 ounces of American Silver Eagles next to 1 American Gold Eagle. This is what most people would automatically refer to as the gold to silver ratio. Another ratio is what I'm calling the retail gold to silver ratio. An American Gold Eagle is currently selling for $4,729.89, and an American Silver Eagle is selling online for $92.99. And now that ratio changes from 60 to 1 to 51 to 1. If you were spending the exact same amount of money, you would only be able to buy 51 silver eagles compared to 1 gold eagle. And that's because silver carries a much higher premium over spot than gold does. But let's dig even deeper, because eventually every stacker answers the question, what happens when it's time to sell? Today, a 1 ounce American Gold Eagle has a buyback price of approximately $4,374.13, and 1 ounce of American Silver Eagle has a buyback price of approximately $68.45. Now, we're no longer talking about spot price or retail price. We are talking about the actual liquidation value, the amount of money you can realistically turn your metals into today. And when we compare those two numbers, we get a ratio that is closer to 64 to 1. That means that on a liquidity standpoint, it takes 64 eagles to equal the liquidation value of 1 gold eagle. And that's what I want to talk about today. These ratios matter a lot more than you may think. The ratio exists when you're actually converting precious metals back into dollars. And before anyone misunderstands me, this is not an argument against silver. In fact, silver is one of the reasons many of us were even able to start stacking in the first place. At roughly $75 per ounce, silver is still accessible. You can buy a few ounces from a paycheck, you can build a tube, or even fill a box. You can watch the stack grow over time, but gold is very different. Gold tends to be a much larger commitment. For many stackers, buying a full ounce of gold can take months or even years of savings, and that's exactly why this decision matters. Because gold and silver often play different roles within a stack. Silver is often the accumulation metal, and gold is the consolidation metal. Silver allows you to build, and gold allows us to condense. And liquidity is one of the major reasons why. Let me show you what I mean. Let's say there was a situation where we needed some liquidity for $4,400, let's say, just to keep math pretty easy. We could sell that 1 ounce gold eagle, or we could sell 64 ounces of silver. But that's a substantial difference in physical volume. 1 coin versus multiple tubes. And 1 coin fits comfortably in the palm of your hand versus the stack that requires considerably more storage space. And while one coin versus 3 tubes might not seem that significant of a difference, let's imagine 10xing these numbers. Let's say that $4,400 is actually $44,000 that you're trying to put as a down payment on a home, for example. That suddenly becomes 10 ounces of gold, half of a tube, versus 640 ounces of silver. That's well over a monster box of silver. Both represent real wealth and both have value, but one is undeniably more compact. This is one reason that throughout history, gold has often been used for large stores of wealth, while silver has been used for smaller transactions. The metals complement each other. They're not necessarily competitors. But in all honesty, it's possible that some stackers may never get to a 1 ounce gold coin. Instead, they focus on fractional gold. So let's bring in the 10th ounce and quarter ounce coins into the equation. When we start looking at the quarter ounce gold and the 1/10 ounce gold, you can see that the liquidity is actually pretty similar. Comparing it to 1 ounce silver, a quarter ounce of gold would be like selling 16 ounces of silver, and a 1/10 ounce gold would be like selling 6.5 actually of American Silver Eagles. I think what's important to remember here is that silver has a higher premium, both above spot when you're buying and below spot when you're selling. Even though it's represented in only a few dollars, either above or below spot, if you look at it at a percentage basis, it is significantly more. Because of that, you can say that gold is more efficient or that gold is more liquid. So instead of asking, would you rather have 15 ounces of silver to a quarter ounce of gold, when we look at the actual liquidation, I'll ask, would you rather hold 16 ounces of silver or a quarter ounce of gold? Many stackers will answer that question differently depending on where they are on their stacking journey. Someone just beginning may prefer the silver. Someone nearing retirement may prefer the gold. Someone expecting a silver bull market may choose the silver, and someone focusing on wealth preservation may choose gold. Neither answer is automatically correct. And this brings us back to the gold to silver ratio itself. Many stackers use the ratio as a trading mechanism. When the ratio is high, they accumulate silver. When the ratio falls, they convert some of that silver into gold. The logic is pretty straightforward. Silver tends to be more volatile. Gold tends to be more stable. If silver outperforms during bull markets, it may eventually allow stackers to acquire more gold than they otherwise could have afforded. In other words, silver becomes the vehicle and gold becomes the destination. Now, whether that strategy works depends on timing, discipline, and other market conditions. Nothing is guaranteed, but it does explain why so many stackers closely watch this ratio. They're not simply watching prices, they're watching potential opportunities to convert from one form of wealth to another. And that's where I think liquidity ratio adds something important to the conversation, because ultimately we don't live at spot price. We buy at premiums and we sell with spreads. And those realities affect how much metal it takes to get to a certain dollar amount. The liquidity ratio reminds us that the real world markets are more complicated than a simple chart. It reminds us that premiums matter, buybacks matter, recognition matters, and liquidity matters. Personally, I don't think that gold and silver should be viewed as opponents. I think they're partners. Silver helps many people enter into the precious metals space. Gold helps many people preserve and consolidate that wealth that they've built. One helps you accumulate, and the other helps you condense. And together they create a powerful combination. So I'd like to hear your thoughts. When you look at the spot ratio or the retail ratio and the liquidity ratio, which one do you think matters most? What would you rather hold? 64 ounces of silver or 1 ounce of gold? 16 ounces of silver or a quarter ounce of gold? 6.5 ounces of silver or a tenth of an ounce of gold? Let me know down in the comments. If you liked today's video, make sure to hit the thumbs up button. Go into the comments to start or to continue a conversation. Share the video with someone you think may like it, and subscribe if you haven't already. To my long-term subscribers, thank you so much for your support. And of course, remember to check out josephsreserves.com for any merchandise, zip-up bags, coffee mugs, or of course the It's Today Again coffee. But most of all, thank you so much for watching. And just remember, every ounce adds up. So no matter how small, just keep stacking.